India's retail inflation has dropped to a 5-month low at 4.31% in the month of Jan, down from about 5.22% in the month of December, largely due to slowing of food price increases. Meanwhile, rural inflation has decreased to 4.64% from about 5.76% in the previous month. Urban inflation, on the other hand, has contracted to 3.87% compared to 4.58% in the previous month. Now, this cooling inflation raises the likelihood of perhaps another rate cut by the Reserve Bank of India, which had reduced its key policy rate by 25 basis points to 6.25% this month. Now, food inflation, which represents about half of the CPI or the Consumer Price Index basket, has also fallen. This time it's down 6.02% in the month of Jan versus an 8.39% in the month of December, making the lowest level since August 2024. Food prices, while still high, rose by 11.35% year on year, a major decrease from December's 26.6% surge. Mithali, I want to come to you first. As an economist, the right decision taken by RBI to cut rates because inflation seems to be now cooling down and coming closer to that 4% range that RBI wants to bring it down to?
So, Karthik, I think, let's do a little rewind back by a quarter when
Okay.
you and I were discussing why the RBI didn't go ahead and cut interest rates, when we were talking about this in October, November, because at that time, the RBI took a neutral policy stance. I mean,
Which
that was the
continues even
time.
now.
Sorry?
The neutral stance continues even now. It hasn't changed its stance. So, do you think the RBI is on the edge? It may want to wait and watch and not be very sure that it wants to be accommodative?
No, no, of course, the neutral stance continues even now, but the interest rate cut has actually happened. And at that time, when they took the neutral stance, they said no rate cuts because we think that at this point in time, inflation is not in control. And we know that, GDP is decelerating, but inflation is still not in control. But in January, they've gone ahead, they've, made the interest rate cut because it's very evident that at this time, the need to kickstart the economy, the need to kickstart the consumption spending actually takes precedence over the trends in inflation. And also, it was very evident that in this quarter, we will be able to combat the issue of inflation because, this is the time when it's not as though we have that much of festive buying. It's not as though, so all the seasonal factors are actually in a space where, inflationary trends are in our favor. And
Right.
of course, the economy has got a triple whammy because the economy has got the tax breaks which were announced in the budget,
Right.
and we've got the low inflation, and we've got the interest rate cuts.
Right.
So at this point in time, for the next 6 months, I don't actually expect inflation to go up, but after 6 months, because of these three factors coming together, again
Yeah.
we might see a cyclical impact and uptick in inflation.
All right, Vivek, Mithali is talking about the triple whammy. I want to bring in one more dimension to that, and that is the depreciating rupee against the US dollar. Now, while it has corrected a little bit between the last 2 days, but the Jan inflation data would have accounted for the massive dip in the INR as well. So, numbers overall looking good to you at 4.31%. While the US dollar and the dollar index was at an all-time high and the Indian rupee had plummeted, numbers at 4.3%, not looking too bad, and could the impact have been even lower if the rupee had not depreciated as much?
Yes and no, both, Karthik, I would say.
Okay, okay,
Yes, because there are certain high frequency items within the CPI basket for which the exchange rate pass through happens almost on an instantaneous basis. For example, if you're talking about, let's say, precious metals in the
right,
CPI, so in the form of jewelry items, so they will tend to pass on the either the international price movement or the exchange rate impact almost on a live basis. So you'll see the transmission happening within a month. So that is getting reflected. In fact, the core inflation did move up, not much, by just about 10 basis points in the month of January, from our estimate of 3.9 in December to 4% in January. So that, to a large extent, can be attributed to what's happening in the precious metal space internationally, as well as the exchange rate impact. So it's a cumulative impact. Now, there are also few items in the food basket. For example, edible oils. We do import a lot of edible oils. Now, here also there will be an exchange rate impact. Although the exchange rate impact is not going to be seen within a month, it could take almost a quarter for you to see that impact.
All right.
Now, beyond some of these items for which the sensitivity of imported price is high, the rest of the basket will show lower sensitivity towards imported inflation. And typically, the channel of transmission from the exchange rate, it starts on the producer price side. We don't have a producer price inflation in India, but we have a WPI inflation in India. So you'll see the first point of impact on WPI inflation. And from WPI, as the corporate sector chooses to pass on, depending upon how much slack they have individually in their own sectors, you'll see that transmission spilling over to CPI. So that transmission can take anywhere between 1 quarter to as long as 3 to 4 quarters, depending upon how much slack it is there in that particular sector.
Right.
So,
too early to rejoice is what you're saying, Vivek. We should hold on for another quarter and see if this momentum of cooling inflation sustains.
Correct.
All right. Well, let's leave it at that. Vivek Kumar, Mithali Nikore, thank you so much for taking out time and being with us right here on News 9.